All right, welcome to my session. So for key levels, obviously key being the keyword, and if you're looking at specific levels, basically I'm looking at levels that have shown price reaction in the past, and so you're looking to chart where areas have changed, have been proven to change direction at specific points, and then you're trying to basically draw lines where those changes have happened to then give you indication of where you will see at least resistance in price to the upside or to the downside. So it doesn't have to be a clear rejection. It doesn't have to necessarily follow what it's done in the past, but it's just an indication for the likelihood of it changing or it kind of hitting a speed bump, if you will. So just to have awareness around those levels to the where you can, if you're in a short and you're approaching a key level, you can be aware to, okay, I might want to get out because price may change drastically at this point. It may not. But it's just something you can have in your arsenal to see in confluence with specifically zones and other kind of stuff. So what I do is I start on at least the 4-hour time frame. If not, I'll go to the daily and look at very high time frames to indicate specific levels. And the higher the time frame, the more kind of action you have. So for example, like this little place right here, this pivot point, there's however many 10-minute candles within that, but you can see it clear on higher time frames because it's more action in a more concise period, so you're able to identify those levels kind of on a magnifying glass level, if you would. So specific levels I'm looking at in regards to just lining up places that have happened in the past. I'm going to go back and I'm going to look at, okay, key level here being the pre-COVID happening. So obviously I'm just going to first and foremost draw a key level at that point because that's what psychologically people are going to be looking at to gauge market movement in reaction to the pandemic. So that's got a level. Normally I do bigger time frames. I'll change the colors and the styles to where I can basically say, okay, teal and solid line are daily levels. So that was the level, coming off of COVID that I would have been looking at for a reaction to the downside. We didn't get it at this kind of consolidation area. We did get a little reaction up at the top. So if I were to draw the top of this as a key level.
So why didn't you draw? Why did you draw the bottom one there? Is it just because that was kind of like the average in that area?
Yep.
Okay.
Yep. So sometimes I'll draw immediate, or not immediate, but kind of the extremes, and sometimes I'll look for averages. So that one was an average that I was looking at because, yeah, and you kind of have to, like, this top one, you saw a rejection here of 165 points. So if you were in a long, say like right here, and you saw it hit this key level, you say to yourself, okay, I'm expecting a reaction from higher highs. So if you had gotten out of there and it comes back to your entry, you probably would have gotten stopped out, but it didn't continue. So if you were like, okay, I'm going to take profit, you would have taken profit on 150 points rather than risking coming back to your entry.
So you essentially played a kind of zone there. You would play a kind of zone.
Yeah, so like key levels and zones kind of a lot of the times line up together. You should look at it. So for example, this is a daily zone right here. What we had is we've had it hit the top of the zone, which you can look at that key level for kind of for indication that, okay, if I have a zone and it's approaching my zone, I might take a short here, but this key level up here indicates, I may actually want to wait till it hits the top of the zone and or my key level. So it's a way to possibly be more concise in your analysis for when to get in and out. So let's look at other. Why did it do this? Sometimes I hit TLS. Okay, so other key levels. I would say this would be a key level right up here. So this is a key level, and we saw the reaction here to that key level. Didn't necessarily make it up right here. I would say, we have this kind of area. It's kind of that consolidation period that we had before the drop. Crusher, for example, this would be a scenario where I would be likely to draw a zone on this whole thing because of how much it eclipsed it. And you see that it came into that zone right here and then hit the top of the zone right up here in coordination with that key level. So that's a situation like I would, for example, draw my my zones that big. Another key level we had all this consolidation kind of right here, almost peaked down here. So I would probably, consider this point right here to be a key level. So you're just trying to find areas of, you could even, so I took the median, so you could have 3 levels right here actually. Kind of one right here, one in the middle, and then one at the top of the candle. And you see how price kind of reacts. So if you're looking at this as like your standard bell curve, you're looking at this being the median, this being the, one standard deviation, this being another standard deviation. And you're looking at 1 tick, 2 ticks, coming into that and reacting, but more so going into the median. Then you have, the reverse. So oftentimes you'll see the whole Ricky, saying of old supports become new resistances. That's pretty much what key levels are trying to tell you, is they're trying to give you a heads up on where those old supports will become new resistances or continue to be resistance. So this was considered a resistance again. However, as it comes for like that, as it comes and price makes higher lows coming up to that point, we see a push past it, retest of it, and continued growth above it. So if you're looking at key levels on the daily, those would be kind of ones that I would draw. We can get into it on the 4-hour, and I like to do the 184-hour if I'm just drawing all of them. So you'll see that this is what kind of my bear chart looks like. Actually, I'm going to do this. All right, so that's a little better. The red is the 200 and the purple is the 50 EMAs. Let me show you. So this is the drawings that I have currently on my NQ. You'll see these levels be key levels that I've drawn. Rejection point, support point now instead of a rejection. Fake out to the downside, support off it. So rejected, support with a fake to the upside. Now when it comes back down to that key level, what am I expecting it to do? I'm expecting it to do what it's shown itself to do the previous time it came to that level. I'm expecting it to bounce. But when we get a reaction, we get a bounce, and then we come back down to that key level, deciding again what it wants to do, reacts again for the next time. So you see that this level is held up multiple times and proved itself to be a very strong price point where both buyers and sellers have come to determine that the price isn't necessarily fair down here, and so they're trying to move into a fair price. You'll see again as we go down, this is kind of this weird consolidation around that key level, and you'll see that key level is basically an average during this consolidation period, and then we go up from there, and as it comes back down to that key level, we hit it again and we react. So this is a perfect example of how a key level is played out, and if you don't have that like 1100 like line drawn, and you're like, oh yeah, prices continue to go down, and you're like, oh, there's a zone down here, but you're not aware that, okay, prices bounced already like 4 or 5 times at this specific level, not necessarily at a zone, but at this level itself. That's something you can be aware of, and then you can either get out of your short or prepare to go long, depending on what your sentiment is. Now, if we look at here, is this a zone area that we could draw? Not really. Prices rallied. This may be considered a zone, but that would be a stretch for me on the 4 hour. So I'm not really looking to use that as a point right here to where I could have a zone play off this. But that key level is something that tells me that I can have a pretty strong indication that, okay, price is going to pivot at this point. So that is not a bad percentage. If you're looking at just percentage plays, you're going to go long here. No, let's higher percentage plays to play off the point where it has proved itself to go up from the point previously. So we have a lot of confirmation that this level is valid. So I'm going to go long here. I'm going to risk the 64 point to the downside to have 1,400 points to the upside. So obviously we can't take 60 points downside risk, but I would change my sentiment right at this point. If I had a bear sentiment and we saw this reaction to price over the next couple of days, I would change my sentiment to a bullish sentiment, and that would have been the correct sentiment, just based on price reaction around a specific level. This is also coming into price action with 11,000 being a very whole number to look at, and so that sort of plays into it, as well as the psychology of whole numbers. And you'll find that often, when we get to, for example, like 12,000 here, 12,000, we see reaction here, we see kind of a reaction around 12,000 here, fake it a little bit, but pretty much a reaction, 400 points difference. But yeah, so I do my 4 hour key levels with the cyan here, and then I have my these are 4 hour zones that I have with the yellow. So you'll notice, like, for example, this level right here, this is a perfect level that I'm looking at in coordination with the zone. So 1, 2, price supported right here, supported, but then rejected, almost rejected, comes back up to that level, rejection, consolidation, and but below it, pushes through it, comes back to it, reject, or support, rejection, fake out, support. Now finally it gave way. Viewed it as a rejection, going further down, then comes right back up through it. When it tests it again after the massive upside above it, finds the support, creates a zone here. All right, so now we never retested that level. So for me, this is a strong point to where we can look at, to where we can say, okay, we've got a zone here that we've developed on the 4 hour. But we also have this key level where we've had a lot of action around it in the past. So am I going to take a long off the top of this zone? Probably not. I'm probably going to wait for the reaction to this key level at 11,560. 5,600, sorry. That's probably going to be the level that I'm going to go long on, that or the bottom of the zone. Because, you know, this zone is how long? This zone is 120 points long. So instead of risking 120 points to the downside, I'm going to look for it to retest this level for a higher confident trade, higher percentage trade to the upside. So that's the perfect example of how levels play into zones and how you can use them as indicators where to enter within a zone. So these are on the higher time frames. You see I have a level up here above that. Rejection, comes back of it, support, rejected, pushes through it, and now this key level was the pivot point to the high. So it got tested once, twice, 3, 4, 5 times, and then we left it. So this level, and if we're looking to the downside, these levels I think are basically like, think of floors. So if I'm looking at like, how can I draw like a freaking? I just want to draw like a pin. How do I do that one? I just like want to freehand draw on it. I don't know if I can do that. Basically, like if I'm looking at these, you know, teal levels here that I've identified as key levels, if price comes down, I'm looking for price to stair step down these levels. So I'm looking for it to, okay, hit this, react, but then kind of like that's floor 5, and then we're going to take the stairs down to floor 6, pause at floor 6, take the stairs down to floor, you know, or sorry, 5, 4, 3, 2, like, so these are examples of where I can see us to the downside. If we're coming down into these levels, I can see us having resistance at those levels to then come back and either touch a previous level above it to get another rejection for strength and liquidity to flush through that level. Does that make sense? So I'm looking at support right here. I'm going to look at a rejection right here. I'm going to look at a break of that, support, rejection, break of that, support, rejection. So that's how I expect the downside move to go if we do see a heavy downside, just like this example right here. Over here, boom, support, rejection, support. That's 200, so that's another support that I would consider. But boom, rejection. So if you're looking at that, key levels can be used to the upside and to the downside. So they're kind of those pivot points that you kind of have to be aware of. So getting a little more zoomed in, I like to do the 30-minute 30-day, or sorry, the 30-minute 4-hour to get what's happened within the month. So if we're looking at January, so at the end of January here, we're looking at some busy action, but I've identified 4-hour key levels within here. So first one we have at the top is this guy right here. So this was beginning of January. This was 12. Sorry, not beginning of January. This was 12/18. So December. So key level right here. Complete rejection of it. Comes back in to get rejected again because. And look at that. Like, just look at how that played. Like, this thing rejected through a couple key levels, which is this right here is just a very rare occurrence. Is what we did. We moved 500 points within the day. That's just insane to me. But you see how we rejected a couple levels, which could be considered, you know, as support. So if you would have gotten long off that, you would have gotten screwed. But that is a high percentage play rather than, you know, getting long up here, you know. So if you're looking at it and you're looking at just percentages, support, 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 expect another support here or here where we've proved a support in the past. If that doesn't go up for you, your stop's hit, congratulations. You just made the better play than getting long, say, up here or something like that. So it's just a matter of, those higher percentage plays actually going out in your favor, and you not rather take 2 or 10 points of stop loss rather than for the possibility of like 160 points to the upside. If it doesn't go your way, on the next one you might get it. On the next one, boom, you would have gotten 196 points. Say your stop loss right here was 10 points each time. Congratulations, you're 20 points down. Big whoop. You get on the third one, now you're 180 points up. So now you're 160 points net. So if you're looking at that in regards to just like net, boo-hoo, your play didn't work out right here, your play didn't work out right here, but your third play, it worked out, and it covered every single one of your losses that you occurred on the way down. Does that make sense? So if you were just playing this on Keylevels, this would have been a winning trade, within the day, basically. But yep, so this is the 30 level. That's the 4-hour one I have right here. I haven't really done any more. This I wouldn't consider a key level. On the 4-hour, it doesn't really, I don't really like it, how it doesn't clearly, like, you see how this one, like, this one clearly has a reaction here, clearly has a reaction kind of there. Sorry, this one clearly has a reaction here, has a reaction here, has a reaction here. I like that, like, very stark reaction plays. This one, if I were to look at this, is like a 4-hour level. Don't really have much reaction, maybe once, twice. It's just less of a valid one. I just draw them because of the just the awareness of, okay, if this does turn around, what did it turn around on? Okay, it was a level previously had. So it's good to just go back and find these peaks and valleys, if you will, of where prices shifted and pivoted previously, to give you an indication of where it might shift in the future. For example, this one within the past week, right? Boom, we got a rejection here, complete buy up. Come back to it, revisit it. What happens? Save for like 30 points, complete buy up again. So if you're wondering, oh, why isn't price going down? Why isn't it breaking? Oh, okay, because it's had a level right here that we were looking at where buyers were still present, from the previous test of this level. So those are situations you have to just think, okay, on this way down, price isn't just gonna, it's not just gonna free fall and drop like crazy. It's gonna have points of relief where, sellers like, yes, where sellers and buyers need to step in to give liquidity to the sell side. So you're going to get a bounce and a reaction. Those type of things. So those are what key levels are indicating to you. So these are my levels on the 30-minute. If you go, sooner, like what do? I do the 1 day 10-minute. I'll do the 5 to 10 minutes. So we're looking at the past 5 days, past 5 trading days. All right, what key levels am I looking at? I'm looking at this level right here. So we see price react to this level. Boom. So kind of pretend like this highlighted area right here doesn't exist right now. So on your left side, you see, if you had drawn a key level right there, right? You would have drawn that and you would have seen price get rejected off of that level. And so on that massive rejection right here, if you see it come up, see it reject hard right there. If I FOMO in right here, I'm gonna be good in my mind for a ride down. Okay, and then so I'm gonna scalp that a little. As price comes back to that level, as it just got massively rejected to it, if it comes back to it, I'm taking a short off it, because one, that's a zone right here, like this little one right here, but this shows you where price is pivoted, and we have a failure to use this level as now a support like we did. So once it rejected it, it's now a resistance. So a short right here would have been gold. Boom, write it down, 180 points. Boom, come down. You know, if you have this, the trend line too, okay, boom. Like, so you can use these things as additional confluences in your thought processes as you're beginning your trades. Okay, there's a level up here. Okay, as price comes back, we have a previous support level that has now become a resistance level. So, oh, it's also getting rejected. Like it's also, you know, making a. We also have a trend line that shows that we're on a downtrend, and you know we made a lower high. Okay, so I'm gonna get short at you know where the trend line is. But if you look at it, if you're looking to get short off the trend line, that's 50 points that you could have gotten if you were short off of the level. Does that make sense? So if you're looking at a situation where you have the option of, okay, I'm going to get short at the key level, then you set your stop at entry. This thing is never coming back into your stop loss until freaking 150, like what, 1 day, 2 hours later, instead of, you know, if you get right here, there's a possibility of it making, you know, of coming back up and, you know, wicking you out to the downside. So if you're looking at higher probability trades, the key level right here is the higher probability trade. And now, okay, say we made a zone up here, which we did. So say now this has been hidden, and now we're coming back up. We've got these levels down here. Say we got long, and you're long right here off this consolidation, right? So you're coming up and you're like, oh, where do I get out? Where do I get out? Like, you're looking at previous levels that we've had. Okay, you know, this is a previous level. This is a previous level. What do we get? Around this point right here, around this level where we've had, you know, right here, we're going to get some reaction to the downside. That's nothing to be afraid of. That's just something to be aware of. If you want to get out right there for fear that it might go down, that's a good, you know, a good exit point. That's nothing to be ashamed of. That's 180 points. Say you wait, you see what price does. Okay, we came back up. We now finish this. All right, we're coming up into a sell zone. All right, am I going to get in at the, I believe we actually, this is a trade we took, Crusher, right? So we got short right here, right?
Mm-hmm.
We got short on the entry to the zone. If we would have waited for that key level, we would have experienced 12 points of drawdown instead of 36 points of drawdown. So if you're looking at that, all right, short, we're getting rejections here, take to the upside, and then drop. So that level that we charted from, you know, 5 days ago stood to support this drop here. So now that, like, that's a level that I'm going to keep there and be aware of for price reaction in the future. If we come back up to the upside, you bet you believe I'm going to be watching for this level for us to see action to the downside. Now, however, we have touched it a lot of times. So as it touches, as it keeps touching, I'm looking for that to be less and less. I'm looking for it to do less and less of the same thing that it's done. Does that make sense?
Mm-hmm.
So if it's rejected, the next time, I'm going to be wary of a rejection. I'm going to be aware, but I'm not going to think, oh, it's going to reject hard like it did right here. No, I'm going to think, okay, well, it's a zone. We filled orders. Maybe there aren't many orders left. Maybe what orders are left, and people are looking at this and saying, oh, it's rejected here, it's rejected there, it's going to get rejected. Maybe those orders are the liquidity that we need to bring this thing higher to the upside. So that's what I'm kind of thinking as a market maker in this is, okay, what is it going to be the reaction here, and what do I think, you know, people are going to do? What do I think the institutions are doing? What those levels you can look at, and like, yeah, for example, like this level that I drew here, perfect example of, okay, what happened here? Like, we got rejected off of it. We came through it, we came up to it, boom, got rejected off it. Entered the zone again. Because that's outside of the zone, I wouldn't necessarily be looking for a short up here, but I'd be looking for the zone, especially because we're on the downside, like we're on a decline. So I'm not looking for price to, come up above the previous high, if that makes sense. Like, for example, here on the downside, I'm not looking for price to come higher or even meet. I'm looking for a lower high, if you will. So I'm not gonna not take this trade because I want it to come up here. That makes sense? If this is truly a downtrend and we rejected this, I'm not expecting price to get back up to exactly a double top. I'm expecting us to make a lower high on a continued basis to the downside if we're truly in a downtrend. So yeah, that is pretty much what I look at in key levels. Like, I'm looking at charting the ones from like today. Okay, why have I extended this? Clearly I have it longer than just today. Yeah, so the reason that we got this reaction is possibly because we've had this as a reaction in the past. So boom, 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 around here, consolidation reaction, rejection, rejection, liquidity through it, come back into this area, boom, reject or support, support, support. Now we've rejected off of it. All right, so this is like why Crusher and I are thinking, okay, we may actually, head down more after this, is because these points where we've seen, like, this was a very key level in the past 30 days. So the fact that we got rejected off, pushed through it, got rejected off of it, as well as some of my other indicators indicating like, okay, this trend line, we broke through the trend line, come back into it, tested VWAP, tested the sell zone, tested all these things to the downside. That makes me think, okay, the way we reacted to this is now no longer a support. What do we hit? Support once, support twice, support three, support four, rejection, rejection one. So like, there's a couple of rejections that I could see possibly happening here to send us further to the downside. So that's why I have a short sentiment coming into this week, just based on levels alone. Not to mention the unfilled zones that we have down here. So this is just kind of building your head around, okay, what do I think the market's going to do, and how can I take trades that support what my theory of the market is going to do. So am I going to look to get long and hold it for 100 points or more? Maybe not in this market. Am I going to get short and hold it for 100 points? Yeah, that's probably actually going to be the more highly likely scenario. So that's the trades that I'm looking to take. So that just, all these levels should do is just inform you and give you information so that you can make the best possible decisions that you can. So that's really what levels are. That's just how I draw them, is I look for patterns and points of support and rejection to those levels. I have them charted just so I'm in a trade and I see it turning around. I'm aware that, okay, I was prepared for this. This isn't catching me by surprise. I came into the market knowing that this has a possibility to do this, so I'm going to trade with that in mind and use it in my arsenal to actually make better decisions and when to get out and when to stay in. So, for example, in Crusher and I on this trade specifically, let's see the 5-day to minute. On this trade specifically, the reason that I got out here is because of this level. I drawn this level and we came down into this, and I didn't want to chance it having a very strong reaction to the upside like we have this is 160 points in 20 minutes. This is, 150 points in, 10 minutes. So if I'm looking for price to come back here, I don't want to risk the 90 points I made for a chance for this thing to skyrocket to the upside like it has in the past. So I'm going to take my 90 points and be happy with it and not worry about, the extra, 90, 95, 100 points that I'm, going to miss. If I'm looking at, I have 2 contracts on, I'm going to get out one here because of what the charts have told me in the past about this level. And I'm going to let the other one ride. If it, if that comes back to entry or whatever, like if we have a stark reaction like we did here, I'm going to, get out of that other contract and take half the profits that I would have. But yeah, so that's kind of how you can use levels to inform, your trading. Like I said, it's not about, winning this home run move to the downside of 500 points when, it possibly could have turned around right here and left you in the dust. And you're like, well, no, I think it's going down. No, okay, take the 95 points off the level. Okay, rejection. Take another 95 points off the rejection of the level. Like, do these things consistently. Use the information provided to you to get in and out of trades rather than just, I think it's going to go down or that kind of thing. And that's what's going to make you a better trader over time is using these things, staying smart, and reacting off of the information provided rather than, hoping for information that hasn't been provided to you yet. Because that's what's holding a trade against, what the charts are telling you. That is acting on information that hasn't been provided to you yet. And that's going to, screw you in the long term rather than acting on the information that has been provided to you and making good decisions off that. So yeah, that is basically what I do for levels. Any questions?
I don't think so. Not for me. But thank you, dude. That was awesome.
Yeah, you killed it, bro.
Yeah, that was fucking very informative.
Yeah.